Hello and welcome for No Accounting for Tech, the nerdy younger sibling of our regular No Accounting for Taste podcasts. And we're going to be talking all about the technology powering the accountancy profession. This podcast is a special year in review for 2024. It's not quite your A to Z of accounting tech. It's more like your AI to zero. It just doesn't quite work, does it? We need a Z. We need like Zapier to do something next year, maybe. But anyway, we'll soldier on. I'm Tom Herbert, the technology editor for Accounting Web. If you're watching on the socials, please like, subscribe, or follow. So we'll be rounding up 2024 in accounting tech with two tech titans. So first of all, let's introduce a regular on our year in review podcasts, the tech strategy lead for 2020 innovation, Billy McLaughlin. Hi, Billy.
Hi, thanks so much for having me.
You're welcome. Freshly back from Japan. Did you bring one of those robots back with you?
I didn't know, unfortunately not. I think there's rules on the planes with the batteries and all the rest of it, so.
Yeah. I could see a nice image of you sat next to one of the robots, maybe, in presumably first class. But yeah. um, joining Billy, we have, accounting tech podcasting royalty in associate partner at Scranton Bland and 1/3 of the Digitals for a Cruel World podcast, Ryan Piercy. Hi, Ryan.
Hi, Tom. Thanks for having me on. Yeah, I didn't bring my crown today, so I'm stepping down from my royal throne. But no, thank you so much for having me on.
No, you're very welcome, and looking forward to hearing what both of you have made of the year. Let's get straight into the stories then. And this first one, it may well be recency bias because it only happened last week, but the Iris deal to buy Dext feels like one of the biggest stories of the year, and kind of reflects wider trend. Wider trends in the accounting software industry. So for those of you who might not be all over it, so this is accounting software suite Iris adding the sort of pre-accounting powerhouse Dext to its suite of products in a deal reportedly worth around £525 million. I'm going to come to you first, Ryan. Did this come completely out of the blue for you, and how do you see it playing out?
It didn't come out, I guess, completely out of the blue for me, but considering I do a podcast on accounting tech, you'd hope that I'd know a little bit about what's going on. And the main reason is that if you look at what Dex have been doing over the last year, the playbook is very similar to others that are looking to sell, to exit. So they've been changing their pricing structure. They've been getting rid of a lot of the old, I guess, life deals, which I guess reduce the value of any tech company that's looking to sell. And then they went through a spate of development, right? They're showing that they can innovate, they can show they can do something new. So it felt like they were building up to doing something. Would I have guessed that it would have been Iris? No, considering definitely the joint ownership from the HG side. But yeah, I don't think it was a massive surprise. It was a sale. The figures quite notable though, isn't it?
Yeah, I think particularly with the the size of the deal, the size of Dext. I mean, I think what are they? Their latest accounts were sort of talking of like turnover of 47 million, operating profit of 2.5 million. So, yeah, they must obviously big plans afoot. I guess as well. I mentioned it reflects trends when I was introducing the story there. There does seem to be this contraction, but both in terms of sort of larger firms, larger software vendors buying smaller vendors, but also accountants wanting more of a sort of consolidated approach to their tech. Billy, do you think this is what they want?
It depends who the consolidation's with, I think. Unfortunately, I would say the answer would be a straight yes. We're seeing practices want to, and I've said this term a number of times before, so they want to tighten up the tech stack. They want kind of one umbrella to have that idea of just being able to use one piece of kit. But unfortunately, no matter what happens, and we saw this when Sage bought Futurely, for example, it took a long time for it to integrate. So it's okay, these brands buying tech, buying smaller products, but if it doesn't do that consolidation, it's kind of a bit pointless. One thing I would say about the Iris one is it raises questions for me as to whether Iris maybe are not prepared for MTD. So they're using this as the amount they've paid would suggest that they need Dext under their wing on their side because maybe their Elements product for MTD is not going to be ready. I mean, there's nothing to suggest that other than the fact that, as Ryan said, like Iris is not the one that I would have thought would have purchased it.
Yeah, I spoke to the Iris MD of accounting, Mark Chambers, earlier in the week, and he was quite keen to sort of quite keen to talk up the sort of Dext solo proposition that seems to be there. I think a way for very small businesses to do that digital record keeping and quarterly filing piece. And I guess then the idea would be that that flows nicely into Elements Tax for the final filing, as it were. But yeah, interesting stuff. As a little sidebar, and I know you were keen to talk about this, Billy. So yeah, as American statesman Benjamin Franklin once noted, nothing in this life is certain apart from death and taxes. But I guess for those in the accounting profession, perhaps they can throw in regular software price rises as well. But the public reaction to these price hikes seems to be quite varied. So I think you kindly contributed to one of the articles I wrote about this a little while back, and we sort of juxtaposed the recent zero price rises and Dext, I guess, sort of pricing changes as an example. So, Billy, do you think it's as simple as the higher the rise, the more the accountants complain, or is there more to it?
I think there's more to it, whether it is because of the amount of the price rise, but when you speak to a lot of people that were charged more for the Dext price change, I think that's a great way of wording it because some people did come down. There, generally people say it was the communication, it was the way they were told, it's the transparency of it all. So I think there is this huge part of people feeling like they're in the know, they understand what's going on, they're not just kind of getting thrown at them. But what I see quite often in sort of the more compliance tools, so Iris obviously is a big player in that market, is we're starting to see practices now look to see proportionately the client numbers they've got versus the price they're paying, and if there is an alternative on the market, what price they're looking at. But very similar to when there's a price increase and people run around like headless chickens and say we need to move software quick, we're seeing exactly the same kind of behavior when there's a consolidation, when it's a practice or a business that people have a negative connotation to previous consolidations with. So when you've seen Iris essentially not develop other products, people are thinking the same will happen with Dext. We see it with some other ones on the market as well. And I think the concern is that people move too quick and they put the team through the pain very, very early on for something that might not happen. I know historically and going by patterns, it more than likely will, but it's trying to find that balance of, is it worth moving when the price has gone up if the features are 10 times better than the next one down? And same as, is it worth moving if the parent company has previously retired other businesses? It doesn't necessarily mean they're going to do the same.
Yeah, and I think there's a couple of things on the price change side. Price rises, I think, accountants in general should know that's needed. I think a restructure of the pricing can cause issues. So Dext went and got rid of the legacy price and the all-in-one and changed it to a per client pricing, and then Zero started bundling. And the challenge with both of those is that firms would build a structure around providing a certain service and therefore maybe bundling into their pricing. And if the software provider starts, repackaging the way they're delivering that, it completely affects how they've built the pricing out to their clients. And And that's what you see, like especially in the Xero side, a lot of the payroll pricing became a problem because now we'd be doing single director payrolls. Well, actually now you've got to put them on a much bigger Xero package to be able to do that. So I think it's less about the price rise, but more about the restructuring that caused the problem. But I completely understand what you're saying about the whole Dext concern with the recent acquisition, especially when if you look at the multipliers Tom's talking about, 2.5 million operating profit to 500 plus million acquisition, you're going to have to do something there to get your return on investment right. You're either going to have to increase the top line or reduce your costs to try and get that multiplier up, and both of those will have an impact on delivery. So there's a lot of talk at the moment about, it's not changing anything for Dext. I'd be surprised if it doesn't in some way.
Mm-hmm.
Great. So let's move on now to, what's obviously a much anticipated section on artificial intelligence. We've had a lot of initial hype and excitement when the likes of ChatGPT was launched 2 years ago. It's taken a while for AI to sort of percolate into real tangible products that accountants can use, but it's continued to move forward. And perhaps one of the biggest developments we've seen over this year has been the launch or soft launch in some cases of the AI assistant. So the likes of Sage Copilot, Xero's Jax, Intuit Assist for the likes of sort of QuickBooks and TurboTax over in the States. Ryan, you brought this story to the table. First off, what do your definition of an AI assistant for accounting software, and how useful do you see it being for day-to-day work?
Well, I guess if you look at what co-pilots have brought, it's that the alternative way to communicate to get information out. So, in a much more user-friendly, language-based, conversational way of extracting information out of your software. So, from the finance ledger perspective, it'll be asking a simple question and getting back, quite relevant and probably powerful data, and that's essentially what I believe the likes of Sage Copilot, Xero's Jax, and Intuit Assist are doing, but they've all approached it in slightly different ways. So my understanding with the way Xero's going is that they want to enable you to communicate from pretty much any platform, so like WhatsApp, through Xero itself directly, through maybe even text messaging, asking the question and then getting the information out on your specific piece of, I guess, the envelope that is Xero, just be your little area of it. Intuit has gone down the route of going, okay, we want it to go across all our products so you can really extract information across all of them. And I think Sage are kind of navigating somewhere in between the two. But the thing for me is that there was lots of announcements, lots of buzz. I said, oh, look what we've got. I've not really seen anything tangible come of this so far.
Billy, you're obviously all over AI. You even have your own video, the Friday Eye. Am I saying it right?
Yeah, that's right.
Yeah, video that goes out on LinkedIn every Friday. So if you're not already connected with Billy, then do check that. Does it go anywhere else other than LinkedIn, Billy? Or?
No, I have started to just post the historic ones on YouTube. So yeah, I think there'll be a weekly one on YouTube, and then obviously the weekly one on LinkedIn. So either or.
Ah, nice. Okay, great. Sorry, I'm getting distracted. So it does, as Ryan's described, it's quite a fundamental change to the way that accounting professionals operate. As long as personal computers have been involved in accounting, it's always been these sort of menu-based browsers, shortcut keys, whatever, whether that's desktop or cloud. Can you see them catching on in a mainstream way, or is it going to just take time?
Yeah, I think like anything, it is going to take time, and we've all seen the graph of the adoption of ChatGPT in comparison to pretty much anything that's ever been adopted. But there's the adoption, and then there's actually using it properly. Like there's kind of like the tester adoption, and then there's actually using it. So how many people are using it in the same way they use their Amazon or Google at home and ask it the weather, or ask it a simple question, and how many people are actually training these models to become useful assistants? How many people are feeding back information? How many people are actually understanding the essence of how important a prompt is, etc.? So in terms of like the standalone products, I think the adoption hasn't quite been as great in our industry, and I think that's because of a lot of accountants are relying on your Sage, your Xero, your QuickBooks to bring something into their models that they can use because they know the safety is already there because the safety will meet the same requirements as their existing products. So I think there's this element of reassurance with the ones that are in there. I do like Sage's approach. I mean, they've got very big plans, but they've got a great approach with their idea that if you ask it something and it doesn't know the answer, it will tell you it doesn't know. It's got a very limited use case for the time being. But there's a fine line between building up the confidence of people knowing it's going to give you the right answer and people saying, oh, it can only do a few things, I'm not going to use it. So that's why it's quite difficult, I find, to get people to use these models. One thing I would add, which isn't necessarily in the accounting space, but I think with Microsoft Copilot and what that's going to do, I think that is going to change the game for AI because majority of accountants use Microsoft and they're going to be able to see ways that these assistants, and we could go on to agents, but we'll stick with assistants for now, how the assistants can help them, how you can ask your spreadsheet to create a pie chart in using that normal language. And I think that's where the benefits are going to come. And then because of that, the confidence will increase, the excitement will increase, and then the intrigue, and then people will be like, actually, where else can I use it? So hopefully, it'll kind of go from the massive products and then filter down into the smaller ones.
Thank you, Billy. And Ryan, you've added a coda about Intuit in particular, which earlier this year laid off about 1,800 of its staff, but not to cut costs. Their CEO was claiming that they were going to rehire people with AI expertise. So, I mean, analysts are talking about the tech industry's $1 trillion bet on AI, and it seems like accounting software vendors are following suit. Is this something, do you think, that's going to become more common among accounting software vendors, do you think?
Yeah, I mean, it's a big leap for Intuit, but they do have good reason. So although we don't really or haven't experienced it over in the UK as yet, Intuit's TurboTax product has been building out its AI functionality to automatically ingest documents to prep a tax return and then create its own risk assessment based on the information it's gathered to then feed it through to an expert to go, look, we're confident on this area, but you need to review this. Now, that fundamentally changes the way that tax professionals would work in completing personal tax returns. Obviously, it's early on, but that's why Intuit are throwing all this investment at the AI side, because they can completely revolutionize the way that, the way we are compliant. And it's different in the US market because TurboTax is very much that self-serve model. It's not government run. It's a huge money winner for Intuit over there. We don't have the same thing over in the UK, but there are already software companies developing the similar kind of solution in the UK. And when they start to gain traction, if you don't use those, you'll be at a fundamental disadvantage to those that do. And so you have to keep your ear to the ground. You have to keep awareness. You probably have to follow, the likes of Billy to make sure you're understanding what's changing on the AI side, so that when I guess these systems do properly gain traction, you're not left behind.
Just very finally on AI then, Billy, where do you see, you obviously take in a huge variety of different sort of AI content for accountants and more generally, where do you see the profession when it comes to AI? Is it still the cutting edge firms and the tech curious that are experimenting? Or, I mean, do you see 2025 as the year that it moves into the mainstream, or is that too much of a stretch?
I'd like to hope so, but I think with everything else practitioners have got going on, I mean, this year with the budget was a bang. You've got MTD on the horizon. There's so many other things that practitioners know are kind of at the forefront of what they've got to contend with. I feel like they know AI can help, but it's one of those things at the moment where it's not going to solve something that cannot be done. It's just going to make things better. So it's not a priority. It's not something that people are missing. But I think Ryan just made a really great point that if people are not using it, they'll start to see that they become a disadvantage to their competitors. So I'd like to hope the adoption will increase, and I think hopefully people will get over this period that we've had of complete overwhelm as well. So there's quite a lot of AI will change your life, and then nobody follows up with actually how.
Yeah.
So hopefully when there's more education around specifically for our industry, you can do X, Y, and Z, and this is how you do it, and this is what this news means for an accountant. Until people just start homing in on that data, I think people will switch off because they don't need to know about the latest and greatest Google AI updates and how they've raised 6 billion and everything else in between. They don't need to know all these different parts around it because it's not relevant to them. But unfortunately, I think that turns a lot of people off. So fingers crossed for more adoption next year.
Well, Billy, you've led me beautifully onto the next part in terms of the government committing to that April 2026 Making Tax Digital deadline. I mean, there's just obviously a prodigious amount of stuff out there on it already, so we don't have to spend huge amounts of time on it. But I guess I'll come to you first, Billy. You know, in terms of the accountants you deal with from a 2020 perspective, how's the landscape looking? Is it going to be a crazy year for accounting firms getting ready for MTD?
Yeah, absolutely. I mean, interestingly, I had a focus group last week with a lot of practitioners, and I said, right, okay, who's joining the pilot scheme? And it was just virtual tumbleweed. So it's interesting. I think they've got, again, a very, very low take-up rate on the beta program. I don't think a lot of people are doing it, probably because of being burnt last time and the restrictions last time made it so difficult. And I think also, again, it's this messaging of people are really homing in on what tech they need to use for this, when actually the important message is how do we get our clients in the habit. So I think as much as I'm obsessed with technology and I think it's incredible for our industry, because people home in on it so much, we quite often forget how important the human aspect is. And in this instance, it's that hand holding for our clients, getting them the habits of bringing in information quarterly and getting ahead of that. And if you can change those habits this year, then you can worry about the technology alongside it rather than just doing one or the other. But yeah, it's going to be a very busy period. I don't think as many people are doing the program as expected. But I would be interested to hear from anybody that is, because I'd like to know what their experiences are.
Yeah. So Ryan, I'm hearing from a number of software vendors that it's actually larger firms that are going to struggle more than their smaller counterparts. Obviously, just because of the scale, they have more clients and have left it perhaps later. I mean, is there any truth in that, or is that just sort of marketing to try and sell a few licenses?
It's probably a bit of both, to be honest, Tom. I think there's, to try and get any traction, any movement in the bigger firms, it takes longer. And I think moving the goalposts regularly from HMRC has not helped with this. So I think there is a delay, but there are many firms that have taken decisive action early. They know what the plan is. And then it comes down to exactly what Billy said. It's about trying to convince those clients to work in a different way. And I think that's the bit that's probably been put off more from the bigger firms because of the worry of losing clients. And if you go too early and your competitor hasn't, then there's still that, I guess, that opportunity for your client to say, I'm not happy with this. I'm going to go to somewhere that's not doing anything yet. And so it makes everyone put things off. But I'm relatively confident it will come out in the wash, Tom. It always tends to. So yeah, I think probably is a little bit of marketing. It's like using the word advisory over and over again for years.
Oh, yeah. Great. So let's look at another story that was enormous on social media, or at least LinkedIn, which is essentially accountant social media, isn't it? But yeah, software switching. So Stuart Hurst, founder of Cloud 10 Accounting, posted publicly on LinkedIn about an offer he'd got from QuickBooks of a switching bonus of up to 22,000 to move clients from other cloud accounting products to his. I mean, it's worth noting that Stuart's a notable and very visible Xero user. And the comments below his post kind of descended into that tribal sort of football supporter style disagreements over whose software was better, etc. But I mean, it raised an interesting point about software switching. Betty, what did you make of this? Is all fair in love and accounting software?
Yeah, I mean, something that has just come to mind as you're saying that out loud is, and I think Stuart Hurst is fantastic, he's a great guy, but we can't forget he did also promote Sage for a while, and I wonder if he'd share the message that Sage initially sent him in a similar sort of way, because if this was QuickBooks inflating the fee because of him being a Xero MVP, um, other software do the same, but on my first glance when I saw this, the figure is just ridiculous. Like it is, I think it almost just immediately just feels like it's too good to be true. Nobody's going to pay you that. And then it feels like you already feel like you've got to jump through 700 hoops. So anybody that they're offering this to with fees like that, I just don't know what they was expecting. I'm head in the hands like who signed this off? Um, and interestingly, again, it feels like they don't understand accountants, because I know from practice days when we got offered commission for whether it be professional fee protection, research and development, there is a lot of of sort of red tape, there's a lot of conversations to be had at the top level in a practice before you can sort of switch your clients around software and take a fee for doing it. Like it just doesn't really seem particularly ethical for our industry to be doing it. So yeah, and then the only other thing I guess really to add is as we see we discuss the acquisitions is when these new products come to market, they land grab. You know, it's stack it high, sell them cheap. QuickBooks did this in the early days. I was a buyer of one of their £1 licenses if you bought 7 million of them. So you see that with the inception, but very rarely do we see it with established products. And it now raises question as to what do these products do once they're established? How do then they go and land grab, and is this the way they do it? So we can give them gyp for it now, but we actually might see more products doing it to try and get that customer base back.
Ryan, I'm not going to ask if you've been approached to switch softwares, but just wondered what your thoughts were on.
Ryan's knee deep in conversions right now. He couldn't squeeze in this hour.
Yeah, I think let's just say it wasn't just to Stuart Hurst. That's probably the easiest way to put it. It's just Stuart being, bleeding blue. He would be the one that would go to social media about it. I think the thing for me, right, is that this kind of activity is just heightening or pulling on something that is becoming a big problem in the accounting sector at the moment, which is that people are promoting software without disclosing that they're getting paid to do that, and that is creating a huge amount of distrust. And there was not in Stuart's post, but in a different post, there was quite an argument between the blue and green side about promotions without disclosure. And I think we have to be very careful that as an industry, we've always been, held ourselves to a high bar of being ethical and with good morals. And we're starting, or at least certain people are starting to cause issues by not doing that, or at least not being as open as they should do. And I think we should all reflect on that, and we should all be going, okay, well, maybe we do need to take a step back, disclose a bit more. We hate disclosures generally, there's disclosures everywhere in accounting, but as individuals, we maybe should disclose a bit more about what we do.
So rounding off our year in accounting, let's take a look at Xero. It's been quite the year for the Kiwi Cloud Pusher, as well as Jax. We've seen more of a focus on core products and markets. I sat in their CEO, Sukhinder Singh Cassidy, gave us a presentation about their 3x3 vision, and being the grumpy old cynic, I was like, yeah, no, this is just marketing, isn't it? But actually, when I got to interview her, and you sort of hear about why they're doing it, they're focusing on their sort of three, core accounting segments, as it were, and then the three main markets. Like, okay, no, that makes total sense. So yeah, that was fair enough. But yeah, it's quite a year. Ryan, as an enthusiastic Zero follower, you added a couple of things to the list. So Zero's acquisition of Sift Analytics for sort of $70 million. So, for those who don't know, Sift Analytics is a sort of insights and analytics platform. And then, obviously, its decision to get rid of its Zero Go product. That, I guess it was a sort of entry level mobile accounting app that was launched at, I think, the previous ZeroCon a couple of years before, but never really got a great deal of traction. So, yeah, what have you made of Zero's year, Ryan?
Well, first, I love the phrase Kiwi cloud pusher. I think that needs to be used a lot more. That's brilliant. And I think, if you look at the 3x3, the bit that you probably think in the UK is a bit underwhelming is the payroll side. I believe one of the three pillars was payroll, and that just feels like it's had no attention for a decade in the UK. But if we focus on the acquisition of Sift, well, I think if you compare that to the acquisition of Dex, this is a huge win for Zero, because not only are they getting access to a data cleansing tool, a benchmarking tool, a reporting and forecasting tool that has been picked up by most accountants, especially in the UK, but the vast amounts of data that has been collected by Sift, because it was like an all-in-one fee and just add all your clients, you're not being charged more. The amount of clients they must have had on the platform was phenomenal, and so the amount of data that must be in there and insights on those clients must be phenomenal. So ignore the fact that they've actually got tech products. The data acquisition was amazing in itself, but to make it profitable, they have to change how it's going to work. So I'd expect them to break up this all-in-one fee and make it, priced per client, but probably build it into their platform over time. I think the thing is they don't need to worry about that as much early on, because they get so much from the data. The Zero Go aspect was probably expected. Like, if you were at the ZeroCon where it was announced, it's one of the quietest responses from a group of accountants ever. I think it was not a whoop. It was more like, oh, which I think really summarized the lack of interest around this product, which kind of made sense for it to be let go. But it shows that Zero still haven't quite got everything right. They're pivoting from being one that was a new startup to now becoming profitable. They've had to get rid of a number of products over the last couple of years, and now they're trying to make very strategic acquisitions. It'll be interesting to see if Sift is embedded into the platform very well. We've seen them struggle to do it with other platforms. So they've had to shell like Waddle, which I don't know if you can all remember, but was something that they bought years ago and was supposed to really help with the financing side, and they never really brought it in properly. So I think they've turned a corner. I think that this hopefully will be a good next phase for Zero, but maybe we've hopefully seen the end point after the disappearance of Zero Go.
Yeah. And Billy, I'll add a sidebar here based on what you added to our little working document. So, long-standing tax filing and accounts production tool TaxCalc was recently acquired by private equity firm STG Partners. And I think you were interested in comparing the public reaction to that deal versus the Iris and Dex deal we discussed earlier, and then the Zero and Sift deal that we discussed just now. I mean, it feels like the public perception of this has been like wildly different.
Yeah, completely. One of the biggest differences, I guess, is that STG, they don't need like the ego stroke, along with like your Zero and the Iris. They need that place in the market of, look what we've done this. Whereas STG, they're kind of just they're a company that don't need that that publicity. And I know that there was a lot of the announcements around, was it a significant investment, I think was the word that was used with the tax calc one, rather than acquisition, which is,
yeah.
and we always hear this story like merger and all the rest of it. Well, so I feel like with tax calc, they did it really under the radar, whereas the other products felt like they had the marketing teams behind them. They had to shout it from the rooftops. And actually, I think on reflection, it just goes to show that maybe promoting it and shouting about it isn't the right way to go about it. That isn't the way to get the public or the accountants and bookkeepers that are using these products on board. So hopefully, any acquisitions we see in 2025, and I think we should do a sweepstake actually, and maybe do a few bets and see who we think should be, maybe offline, who we think will be acquired and how many there'll be next year. But maybe these bigger products will learn from this and say, actually, let's do it, but do it subtly, do it quietly, and especially, Iris's messages, Dexter continuing down their own path, where essentially still running as two separate businesses. And Sabi's literally posted today about doing a quarterly roadmap to be completely transparent with people of where Dexter's going, which I think is fantastic personally. It's a really great way of doing it because it holds them accountable. But maybe we'll go forward, we'll realise that the quieter ones are the ones that are the most successful.
Yeah, it's always the quiet ones. Well, yeah, fantastic. Well, that takes us to the end of our running order for today. It's been a pleasure reliving the accounting tech year in 2024 with the two of you. Thank you so much to Billy and to Ryan. And thank you everyone for listening / watching. You can get this on YouTube as well. But until next time, for all your accounting news, we're accountingweb.co.uk. Have a great Christmas and we'll see you next year. Bye for now.